What's good, you guys? Welcome back to the Ricky and Nikki Accounting YouTube channel, the only accounting firm that helps you save on taxes, repair and rebuild your credit, and get access to business funding. And of course, we talk about other financial literacy topics. But what I got for you guys today is 5 tax strategies revolving your retirement plans. So make sure you watch to the end so you don't miss out on any of these strategies, because you can implement one of them or you can implement all of them. But either way, you are going to be able to save on taxes and build your retirement account for the future. So with that, let's dive right in. Actually, before we dive in, I just want everybody to get a clear understanding. Even if you are young, your retirement is coming. Each year, your retirement is 1 year closer, and we're at the end of the year. So you just went through another year of your retirement coming closer. And since we're getting close to the end of the year, you still have time. You have until December 31st to take some steps that will help you fund your retirement. Now, with that being said, let's dive in. So, number one, just establish a retirement plan in 2024. If you don't have one or you know somebody and they don't have one, let them know they need to set up a retirement plan. Obviously, for your future, when you retire and you're done with working, this is going to be a good way to have some income. But at the same time, setting up a retirement plan helps you with tax savings, because you get tax deductions when you contribute to your retirement accounts. And who doesn't want to save on taxes? That's more money being put into your pockets. And why I also like retirement accounts, because there's some retirement accounts that you can use to invest. But yes, if you don't have a retirement account and you have some cash on you, you need to put it into a retirement account. So make sure you get busy, get that retirement plan in place so you can obtain some tax deductions for 2024. The most defined retirement plan, everyone knows about it, is the 401k, where you and your employer can contribute to it. And whether you operate as a sole proprietor or a corporation, it's good either way, because you can make both the employer and the employee contributions, allowing you to put a good chunk of money away and to write off a good chunk of money. Now, the contribution limit for 2024 is 23,000 for a 401k. Now, with an IRA, the contribution limit is 7,000 for 2024. And for 2025, the contribution limit for the 401k increases by $500, so it'll be 23,500. And unfortunately, for 2025, the IRA contribution is staying at 7,000. But that's number one, establishing a retirement plan. Number two, what you need to do is claim the new and improved retirement plan startup tax credit. And that's up to $15,000. So just by establishing a qualified retirement plan, such as a 401k, a IRA, whether it's a traditional IRA or a Roth IRA, a simple IRA or a SEP, you can qualify for a non-refundable tax credit. That's going to be the greater of 500 or the lesser of $250 multiplied by the number of your non-highly compensated employees who are eligible to participate in that plan, or it's $5,000. And that may be a little bit confusing, but if you do have more questions, what you should do is set up a consultation. You can text the word retirement to 845-222-1477. That way you can set up a consultation, get more information, and see what you want to do moving forward with your retirement plan and with taxes as well. But continuing on with this startup retirement tax credit, the law bases your credit on your qualified startup costs. For the retirement plan startup tax credit, your qualified startup costs are the ordinary and necessary expenses you pay or incur in the connection with two things. One, the establishment or the administration of the plan. And number two, the retirement related education of employees for this plan. Now let's move on to the third strategy. You need to claim the new small employer pension contribution tax credit. And this credit is up to $3,500 per employee. Now, there was a law passed back in 2022 that affected taxes in many, many ways, and it added a bunch of new provisions and laws that have actually been taking effect this year and coming in 2025. And this law is called the Secure 2.0 Act, which was passed in 2022, like I just said, and that added an additional credit for your employer retirement plan contributions on behalf of your employees. The new up to $1,000 per employee credit begins with the plan to start date. That new credit took effect in 2023, and I bet you never even heard of it because I rarely ever hear anyone talking about it. But there is an exception. The exception of the new $1,000 credit is not available for employer contributions to a defined benefit plan or elective deferral under Section 402(g)(3). And in the year that you establish the plan, you qualify for the credit of 100% of your employer contribution, limited to $1,000 per employee. In subsequent years, the dollar amount remains at 1,000 per employee, but your credit is limited as follows. It's going to be 100% for the first 2 years. It's going to be 75% in year 3, 50% in year 4, 25% in year 5, and after that, it phases off after year 6 and beyond. There's no more. But let me give you a quick example. Let's say you establish your retirement plan this year in 2024. You contributed $1,000 to each of your 30 employees. You just earned yourself a tax credit of $30,000 because that's $1,000 multiplied by your 30 employees. Now, let's say you have more employees than that. Let's say you have between 51 to 100. You have to reduce your credit by 2% per employee in that range. Now, if you have more than 100 employees, then that credit is a big fat zero. Also, you do not earn that credit if your employee earns an excess of $100,000, and that's adjusted for inflation in increments of $5,000, and that's in the years after 2023. Now let's move on to number 4. You need to claim the new automatic enrollment tax credit. And this is for each of the 3 years, and it's $500. So it totals out to being $1,500. So let me break this down to you, because you know that law I said earlier was a Secure 2.0 Act. But if there's a 2.0, there's obviously the one that originated before that one. So the original Secure Act added a non-refundable tax credit of $500 per year up to 3 years, beginning with the first taxable year, which at the time would have been 2020 or later, in which you, as an eligible small employer, would include an automatic contribution arrangement in a 401k. But the new $500 auto contribution tax credit is in addition to the startup credit, and that can apply to newly created and existing retirement plans. Also, you don't have to spend any money to even trigger this credit. All you need to do is add that auto enrollment feature and you're good to go. But with that feature, it does contain a provision that allows the employee to opt out. Now, last but not least, convert your retirement plan into a Roth IRA. Now, before I even go deep dive into that, I just want to give a quick explanation. I'll make a separate video giving you a deep dive on the differences between a traditional IRA and a Roth IRA, but just a quick little example. With a traditional IRA, the benefits of that is you get a tax write-off every time you contribute into it. The downfall is you pay taxes when you withdraw that money in retirement. Now, a Roth IRA, when you contribute into it, you don't get a tax deduction. But when you contribute into it, you're paying a tax. So that means that money that's in that Roth is growing tax free because you paid the tax when you put it in. So it's growing tax free. So when you withdraw, you don't have to pay taxes on that. But now let's get into why you want to convert your retirement plans into a Roth. What you need to do first is answer this question. How much tax will you have to pay to convert your existing plan into a Roth? Once you have that answer, you'll know how much cash you need on hand to pay those extra taxes. But I'm going to give you 4 reasons on why you should consider converting your retirement plan into a Roth IRA. 1, you can withdraw your money that you put into the Roth at any given time, both tax-free and penalty-free, which is major. But why is that even allowed? Because that money that you contributed was already taxed. Number 2, you can withdraw the money that you converted from the traditional plan to the Roth at any given time. Again, tax-free. But there's a difference with this one, because if you make that conversion withdrawal within 5 years of that initial conversion, you will have to pay a 10% penalty. And another thing, each conversion that you do has its own 5-year period. So that's something you need to know. Number 3, When you have money in your Roth, you pay no taxes on qualified withdrawals, which are distributions that are taken after the age of 59 and a half, provided that you've had this Roth IRA open for at least 5 years already. And number four, the last reason why you should consider switching your 401k or traditional IRA into a Roth IRA, and that's going to be you don't have to receive a required minimum distribution from the Roth IRA when you reach the age 73. Because with a traditional IRA, you will have to make additional distributions. Let's put this in another way. You can keep your Roth IRA intact and earn money until you pass away. But after your death, that Roth IRA can continue to earn money, but somebody else will be making the investment decisions and enjoying your cash. So usually that's going to be a beneficiary like your children. That is the end of our video. I hope you guys enjoyed, and I'm hoping you're going to leverage at least one of these retirement tax strategies, the year-end tax strategies. You guys have less than 35 days in 2024, which means you have less than 35 days to save on taxes. So if you need help saving on taxes, you're tired of paying and overpaying taxes, especially you business owners, because yes, you are taxed out the ass. Let's be honest. So if you are somebody who is struggling with taxes, you owe every single year and you want to start not owing, paying less, and actually receiving some money back so you can invest it into yourself, into your business, click the link in the description so you can go ahead and set up a consultation with either me or a member of my team. Or you can do what I said earlier in the video, which is text retirement to 845-222-1477, and we will reach out and set something up and have a good conversation so we can help you move forward, get more money back, and stop paying Uncle Sam because he's not even your uncle. Let's be honest. Was he at your house? Was he with you on Thanksgiving? No, right? Okay, then. So let's stop giving him extra money when we're the ones who need it. We're the ones who's running these businesses. We're the ones employing people. We're the one trying to make the economy better. So let's go ahead and keep investing into ourselves and keeping more of our hard-earned money. But before you guys go, if you are somebody out there who's looking for some credit cards, like different type of credit cards, like a regular everyday one, a travel one, or one that offers 0% APR, check the description down below. There's multiple different cards you can choose from. And yes, they are referral codes. I will get a referral bonus, but you will also get a bonus that you wouldn't get if you just want to sign up on your own. So it's a win-win for both of us. So check that out in the link in the description. Also, if you're somebody who's struggling with bad credit, that's something that we also help with as well. But something I always recommend is getting some credit builder accounts because usually people who have bad credit need some credit to be built on top of getting, the negative items removed. But credit builder accounts is an easy and very affordable way for you to build positive payment history. And down below in the description, I have 3 different credit builder accounts that you can sign up for to help boosting your score. You can honestly boost your score 100 points just by downloading all 3 of them. And another thing that I'm going to have in the description is a link to a high yield savings account. Why I like high yield savings accounts is because your money is making you money. Because I do know there's people out there who don't like to invest. They're scared of investing. Trust me, because I had conversation with family members and they're just like, no, I can't. I'm scared. What if you lose my money? Because I was telling them about Bitcoin, how I have a lot of money in Bitcoin, and they're like, oh no, but what if you lose it all? I'm just like, how are you gonna get rich with that mindset? But I'm not even gonna continue on in this, on that conversation because that's a different topic. But I bring that up to say a lot of people are scared to invest. So having a high yield savings account is the easiest way to grow your money without having to invest. What a high yield savings account is, it's just like a regular savings account. But with a regular savings account that you have, you're earning 0.0001 APY, which means you're getting like 1 penny a year from the money that you have in your savings account. But with a high yield savings account, you can earn upwards of 5% on that money. Now, down below, there's a link for SoFi. SoFi will give you 4.20% APY on the money you have in your savings account once you set up direct deposit. But another reason why I like SoFi because not only do they have the high yield savings account, They have a checking account that's earning you that's earning interest as well. You're getting 0.50 APY on the money you have in a checking account. And I don't know about you, but I have yet to see a bank that's offering interest on money you have in your checking account. Like, that's crazy. You just have money sitting in your checking and savings and it's earning you money each month. That's tough. And I highly recommend you go ahead and set that up because their SoFi is a great platform. Besides the checking and savings, they offer credit cards. You can invest in stocks there. You can get loans, personal loans, student loans. You can do student loan refinancing. There's a lot of they got a lot going on with SoFi, so go check that out. But anyways, if you made it this far, I appreciate you guys for watching. Again, this is the video for the week. I will be uploading a bunch of shorts, but this is going to be the video for the week. Stay tuned because I'm going to be dropping a video every week on some year-end tax strategies that you can leverage to help you save on taxes. But until then, let's keep growing. Let's keep striving. Stay hungry, stay motivated, and let's get to it, y'all. 2025 is almost here, and it's time to level up. Let's go.